Hey guys, I thought I'd do a quick video explaining how the new Help to Buy scheme works. It's a government scheme designed to help eligible Australians buy a home sooner, especially if they have some sort of savings, but their deposit or borrowing capacity is not quite enough to buy the home they need. I'll run through how it works, who may qualify, the main benefits, and the important downsides to think about. Help to Buy is a scheme where the government helps cover part of the costs of buying your home. You contribute your deposit and borrow the rest through an approved lender. The government then contributes part of the purchase price, which reduces how much you need to borrow from the bank. The home is still in your name and you live in it as it's your own. However, because the government helped pay for it, they're entitled to the same percentage of the house's value when you buy them out or sell the property. The government can contribute up to 30% of the purchase price for an existing home or up to 40% for a new home. That means the bank may only need to lend you the remaining amount after your deposit and the government contributions are included. The exact amount the government contributes would depend on your income, your savings, your borrowing capacity, and how much you actually need. You may only need a deposit of 2% of the purchase price, plus your buying costs. The scheme does expect you to contribute as much as you can reasonably afford, so you may not be able to keep all of your savings aside and simply ask for the maximum government contribution. You also need money for costs such as stamp duty, building and pests, mortgage registration, other government fees. Here's a simple example using a $700,000 existing home. A 2% deposit would be $14,000. If the government contributed the full 30%, that would be $210,000, and that would leave you with an estimated home of about $467,000. You would still need to cover the extra money, like I said before about the buying costs. One of the big benefits is that you don't need to pay lender's mortgage insurance under the scheme. Lender's mortgage insurance is usually charged when you borrow a high percentage of the property's value, and it can cost thousands. You still need to qualify for the loan based on your income, debts, expenses, and credit history. Being eligible for the Help to Buy does not automatically mean the bank will approve your loan. To apply, you must be an Australian citizen, be at least 18 years old, buy the property to live in as your main home. You need to meet some income limits and the lender's normal borrowing requirements. You don't need to be a first home buyer, but you generally cannot currently own another property in Australia or overseas. There are some exceptions, particularly with eligible single parents. For the 2026-2027 financial year, a single applicant can have a taxable income up to $103,000. Joint applicants and eligible single parents can have a taxable income of up to $165,000. The government normally checks the taxable income shown on the most recent ATO notice of assessment, which you can just get from your MyGov account or your app on your phone. These income limits can change over time. There are also limits on how expensive the property can be. The maximum price depends on where you're buying. Say, for example, in Queensland, the current cap is $1 million for Brizzy, Gold Coast, Sunny Coast, and $700K for the rest of Queensland. That doesn't mean that everyone can automatically buy up to the limit. Your actual budget will depend on your income, deposit, debts, and borrowing capacity. You can use the Help to Buy scheme to purchase an eligible new or existing home. That includes a house, townhouse, apartment, unit, duplex. It can also be possible to buy vacant land with a building contract or complete certain demolition and rebuild projects. The property must be within the local price cap and accepted by both the scheme and the lender. Yes, you can renovate because it's your home. For smaller renos, you can generally just go ahead as per usual. However, if you plan to spend a considerable amount of money on your reno, you may need to tell Housing Australia before the work begins. This is important because if you spend a lot of your own money improving the property, the value you personally add may need to be taken into account when the government share is later calculated. The government contribution isn't a grant, so it does eventually need to be repaid. You don't make monthly repayments to the government, you don't pay them interest, you don't pay them rent. The government is repaid when you buy back part or all of their share or when the property is sold. The amount you repay is based on the value of the home at the time, not just the original dollar amount they contributed. Yes, you can buy back part or all of the government share later on. You may be able to do this using savings or by borrowing more money if your household income has increased and you can take on more borrowing capacity. This is all subject to lender's approval. A partial buyback generally needs to be at least 5% of the property's current value, and the property will need to be valued at that time. The main thing to remember is that the amount you pay is based on what the home is worth at the time, not what the government originally paid. The main benefits are you may only need a small deposit, you may be able to borrow less from the bank, and your repayments will be lower. You also avoid lender's mortgage insurance, which can save you thousands of dollars. For some people, the scheme may also allow them to buy sooner or purchase a home that better suits their needs or is closer to the local school where they want to buy or where they work. The biggest downside is that the government shares in any changes to the property's value. If the home increases in value, the government share increases in value. If the property falls in value, theirs generally falls in value as well. Your income and ongoing eligibility can be reviewed while you're in the scheme. You need to keep living in the property as your main home. Some changes, extra borrowing, and major renovations may need approval. The scheme is also only available through approved lenders, so not every bank or lender can offer it. All right, let's look at a simple example. Sarah earns $88,000 a year, has saved $18,000 and wants to buy a $650,000 existing home. Her income is below the current limit for a single applicant. However, she would still need to show that she can afford the repayments and meet the lender's normal approval rules. Without the help to buy, Sarah may not have a large enough deposit or enough borrowing capacity to buy the home she wants. With the scheme, a 2% deposit on a $650,000 home would be $13,000. If the government contributed 30%, that would be $195,000. That would leave Sarah with an estimated home loan of $442,000. She would still need to pay the buying costs, and the final figures would depend on a full assessment. Now let's look at what may happen if the property increases in value. Assume Sarah's $650,000 home grows by 4% a year for 5 years. After 5 years, the property would be worth about $790K. The government's 30% share would then be worth about $237K. That is around $42K more than the original $195. Sarah's 70% share of the property's value would be around $553K. That does not mean Sarah receives all of that money in cash. The remaining home loan, the government share, and the selling costs would still need to be paid from the sale proceeds. Is it worth it? Well, Help to Buy may help you become a homeowner sooner and reduce how much you need to borrow from the bank. However, it's still not the right choice for everyone. You need to compare the benefit of a smaller home loan now with the fact that the government will share in any future increase in the property's value. Whether it's worthwhile will depend on your personal situation and your longer term plans. Before applying, check whether your income and the property price are within the scheme limits. Think about how long you plan to live in the home and whether you're comfortable sharing part of the future growth with the government. You should also think about whether you're able to buy back the government share later. I've included a link to the official Help to Buy eligibility checker in the video description. It can give you a general idea to see if you meet the main requirements. The lender will still need to confirm your eligibility and your borrowing capacity. If you're keen on this scheme or want to look into other schemes that you may be eligible for, reach out through my website or give me a call on the phone. Thanks.